Hey y'all, it's Sierra and I'm back with another trading video. Today is going to be my first charting video and we are going over market structure. So if you're new to trading, I feel like market structure is one of the fundamentals you should understand because understanding where the market's going to go and kind of where it's in is really important. This video might be short. We'll see if it's end up being short or not. I don't think trading needs to be hard. As someone who's been trading for 3 years, I'm team work smarter, not harder. You don't need to watch a 45-minute video to learn how to trade or learn how to, certain concepts you don't need to. So we're gonna run through this and we're gonna talk about market structure. Now, this right here is a chart. If you guys can see here, the market moves 3 ways. The market either moves up, it moves down, or it moves sideways. That's it. There are only 3 possible movements within the market. So we have to understand how the market actually moves. So I'm gonna put this here. It's gonna say market structure. Oh man. Okay. It's gonna say market structure. It's gonna be real cute and we're gonna go from here. So if we remember correctly, the market either moves up, okay, that's definitely down, up, or sideways. Okay, so when we are identifying market structure, we have to understand how does it move within these 3 shapes. So when the market goes down, it does not just go straight down like this, okay? When the market goes down, it looks a little bit more like this. There are healthy pullbacks within the market within a downtrend. So it doesn't just go straight down. And then when a stock goes up, it doesn't just go straight up either. There are pullbacks again within an uptrend. So now that we've identified that the market doesn't either go straight down or straight up, we're going to better be able to see how it actually works within the market. So our first thing we have to look at is our highs and our lows. So when we are trading and we are understanding market structure, the overall structure, and if you notice I'm on my 1 hour time frame right now, is going to be one of these 3 things. Now, it's important to identify what portion of the structure we're in because even though the entirety of the market is on a downtrend, that does not mean that we automatically need to take a puts or enter into a trade indicating the market is going to go down, because we could still be in the down or the uptrend portion of a downtrend or the downtrend portion of an uptrend. So when we look at market structure in a downtrend, it's comprised of lows and highs. So here we have a lower low, we have a lower high, lower low, lower high, lower low, lower high, and a lower low. So if you guys see people mark up their charts, it may be like LL, LH, or HH, HL. That's because they're identifying the lows and the highs within a downtrend. With an uptrend, we have the opposite. So we have a higher high, we have a higher low, higher high, higher low, higher high, higher low, and so forth. They're creating highs and lows, okay? There are highs and lows of uptrends and downtrends. So once we've identified if we're in a downtrend or an uptrend, we have to now look at the substructure. So if we see right here, we understand the entirety of the market is going down, right? However, let's say maybe when we trade, we're in this portion of the downtrend. So now that we're in this portion of the downtrend, if you were to zoom in on this on a lower time frame, it's going to look like this. So it's going to look like an uptrend even though it's within a downtrend. Does that make sense to you guys? Even though we're in a downtrend, we can still be going up on a lower scale. That's why it's important to identify substructure. If we go over here and look at our chart, we're currently looking at Tesla. We can see here we have a downtrend on Tesla. Now, granted, yes, we can take puts all day long, right? We can say, okay, we're in a downtrend, we're going to take puts. However, let's say you're trading on this day right here. Even though overall it's going down, when you zoom in and look at this closer, it happens to be going up on this day. Why? Because market structure looks like this. It bounces up and down in order to go in the same direction. So even though this day it was down, it goes up, it goes down, it goes up, it goes down, it goes up, it goes down, it goes up. That's what market structure looks like. So the best way to identify what type of trades you're going to be taking for the day is to identify what part of market structure you are actually in. Now that we're back over here at our little market structure diagram, let's talk about what a break of structure and a change of character is. Okay, so we've got a new definition at the bottom, a BOS or a break of structure. When we have a break of structure, that's when price breaks a trend to create a new high or low. So if we were to go back up here, let's create our downtrend once again. So here we have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. As price continues on its downtrend, we see that price keeps sweeping out the previous low in order to create a new one. So do we see how right here, price takes out this low right here to create a newer one? So when I say takes out, that means it kind of surpasses it. So if we look at this using a trend line, if we put a trend line right here, right, this would be considered our break of structure. The reason this is our break of structure is because price is taking out the previous low to create an entirely new low. So here we have our lower low, we have our lower high, we have our lower low, we have our lower high, another low, another high, and price has created its final low right here. All of our dotted lines that we see are representing breakout structures within the downtrend of the market, okay? So how do we switch trend? We switch trends and we identify what is called a change of character. So I'm gonna make this red again so we can continue it onto our trend. This right here is signifying that we are now in an uptrend. It's not just an uptrend because price has gone up. It's an uptrend because we now have a COCH or a change of character. A change of character is when price sweeps out the previous high. So let's say it's a downtrend, right? It sweeps that previous lower high to create a new high, which is now going to become our higher high, higher low, higher high, higher low, higher high, higher low. I know that's a mouthful, but just bear with me. Just bear with me. It's going to make sense. So now that we have our change of character right here, every time price sweeps out the previous high to create a new one, continuing our uptrend, we are now continuing with market structure, and I perfectly identified our highs and our lows. So how is this even practical for us? Well, when we're looking at our chart, right, and we're identifying market structure, it's important to understand where we are so we know what we're taking that day. If I look on the 1 hour time frame right here on Tesla, we see that we are overall in an uptrend, right? We can identify our highs and our lows on this chart. So if I take my brush, we have price creates a low, lower high, lower low, lower high, we have a little tiny low here, and we have another high. However, our change of character occurs right here when price takes out that last low area and creates a new low. Does that make sense to you guys? So right here, we have price pushing up this whole time, but then price takes out that last low that was created, and now we can start our downtrend. So now we're creating our highs, lows, highs, lows, highs, lows, highs, lows. Now, obviously, it's not going to be perfect on a regular chart, but the concept is there. Understanding our lows and our highs helps us understand what we're actually trading. Okay, we're currently looking at QQQ. QQQ is my favorite stock. I trade it every single day. So let's look at how I would take a trade according to market structure, utilizing this on QQQ. So right here, we notice QQQ is in an uptrend. Okay, so we understand we are likely going to be taking calls if we're in the right portion of the uptrend. So here we have our highs, our lows, our highs, our lows, highs, lows, highs, lows, highs. So if we are trading on, let's say this day right here, what we're going to look for is either a continuation, which would have been a sweep of this high and a continuation to create a new one to take calls, or if price took out this low right here, then we would look to take puts, because now we're creating a new trend, which is going to signify our downtrend. So if we're trading this day, right, market opens, we want to see it either go up, take out this high, take calls here, or if it takes out this low, we take puts. So obviously we see how the chart played out right here. So let's say we set a level, for example. So we set a level here above the high. Oops, that is so thick. And then a level here below the low. So once price breaks below that low, we can say, okay, look, we're going to take puts because price is no longer in an uptrend. It's actually going down to create a new low within this downtrend. So if we drop down to our 1 minute time frame, which is actually the time frame that I trade on, we see that once price breaks through that low right here, it just falls on down to create a new low. So that's how I would have taken that trade. On the 1 hour time frame, we would have identified where price is within market structure, and then we're dropping down to our lower time frame for our entry, and we're going to take our trade based off of that. So if we had just entered, let's say right here where the low was created, we could have taken QQQ all the way from 410 all the way down to 407. That would have been a beautiful trade right here on QQQ. Let's look at NVIDIA right here. So we see that NVIDIA is on a consistent uptrend throughout this portion, right? So we've got our highs and lows and our highs and lows, and market structure kind of looks like this. We have our highs, we have a low, high, low, high, low, high, low. We have the whole structure going on. So let's say that we're taking an actual trade, right? We're going to go ahead and we're going to replay to right about here. So if we were using just market structure to take our trades, we're going to identify we're on an uptrend. So in order for price to continue in this uptrend, it has to take out this high to create, a new high within the trend, or it needs to take out the previous low. So if price can come below right here and take out this low, then we can look to take puts onto our trade. So we're going to drop down to our lower time frame, which would be the time frame that we enter on. It would actually be so cool if I could find, give me a second, y'all, one second. Okay, sorry, y'all, took me a minute, lost my place, but I know our entry target is a little bit further past here. Even on a lower time frame, do we see how price is going down, it's going up, it's going down, it's going up, it's going down, it's going up here? If you really wanted to, you could even add a lower time frame entry, which would be right here, but that would just be my quote riskier entry. I always identify those by dotted lines. So if we press play on this NVIDIA trade, we see price comes up. So let's say we entered right here on NVIDIA. Price comes up to this 457 level and then now creates a new low. So we would have entered into calls right here at 457 or our riskier entry at 455, and we would have taken profit $5 after at 462. Once price comes up, creates our new high, what does it do? Pulls back down to create a new low and continue on in market structure. Outside of that, I know I talk kind of fast, so if you have to rewatch the video, then be my guest in doing so. Thank you guys so much for watching. Please join Crystal Academy. I teach over there. We have admins who teach over there. I will see you guys in the next video. Make sure you like, comment, subscribe, and I will see you guys next time.